is Bitcoin came public. It's clear that you're going to be able to own this as property for the long term. It's clear that this is going to catalyze a bunch of very positive behavior by other regulators in the world. It's going to accelerate institutional adoption. It's going to embolden the political supporters of Bitcoin. It's going to create a marketing war between various Wall Street firms. We see that going on right now. And it's going to strengthen and empower all of the OG Bitcoin holders, because even right now, people talk about, what is BlackRock bought $6 billion of Bitcoin and all these new ETFs they bought. What have they bought? Like 1% of the supply. Well, that means 99% of the supply and 99% of the beneficiaries so far are the non-ETF holders.
Michael Saylor points out a pivotal shift in the Bitcoin investment landscape, moving from speculative short-term trading to more stable, long-term holding. The introduction of exchange-traded funds, ETFs, and the entry of institutional investors are central to this change, offering a way to invest in Bitcoin that aligns with a long-term perspective. This approach aims to temper Bitcoin's notorious volatility and integrates it into diversified portfolios, marking a significant step away from its speculative roots. Now, we'll show you more clips of Saylor, but first, subscribe and turn on notifications.
See a digital trend. Everybody needs it. Nobody can stop it, but nearly everybody disagrees with you. And they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like, demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right? Right? The people that criticize it, there's no way Warren Buffett spent 100 hours studying Bitcoin, right? There's not likely that everyone that criticizes it spent 100 hours studying it. They haven't read the Bitcoin Standard. They probably haven't listened to 20, 30, 40 hours of podcasts, right? So the critics are misinformed, and the mainstream investors, they have all the money, right? There's $900 trillion of wealth out there. There's only $1 trillion in Bitcoin. So 99.9% of the money, of the wealth, is not invested, right, in the asset class. So a lot of people that don't understand what this is have a lot of money, and yet we've got a 10-year period when there's going to be an explosive increase in education, right? As Bitcoin's going to go up, and as the price goes up, more people are going to get asked, and they're going to reject. They're like, stop asking me. I hate talking about this. Like, we don't like it because it's like gold. It doesn't generate cash flows, or they don't understand. If you don't understand perfect money, right? What's wrong with gold? Gold has emissions. Gold is inflationary. That's why it doesn't work. If you don't understand that, then you don't understand why digital gold is better than gold. So you don't understand Bitcoin. You don't understand money. And then you haven't really thought very deeply about property theory or capital theory. So you definitely don't understand digital capital, which means you don't understand digital energy, which means that when someone asks you, you're going to buy it, your answer is, of course, I'm not going to buy it. I don't get it. But when I say to people, right, if everybody read all these books, if they listened to all your podcasts, if they listened to all my podcasts, if they thought about it for a few hundred hours, tomorrow they would wake up, they would all buy Bitcoin, and Bitcoin would be $5 million a coin. And then we'd be doing this podcast, and you would say, Mike, all the comments from all my followers are, is it too late? And I would say, Well, it's too late for you to get insanely rich. You're not going to get 100x, right? If you buy Bitcoin at 50,000 when it's 500 or 5 million, you're going to be bragging to your kids that you got 100x your return, right? So it's going to be too late for that. But it's not too late to buy it because it's still better to buy the thermodynamically sound digital asset, which doesn't have all of the liabilities of real estate, stocks, or bonds. It's still going to go up in value faster than the S&P index. It's still going to be a better after-tax return than owning sovereign debt. It's still going to be better than owning physical property subject to acts of God, force majeure, and all the other physical limitations. So it's still going to be the best investment. It's just not going to be the investment that got you the 100x return that you were going to brag about. And so there's no reason to worry, right? Or fret. You don't want people to figure this out, right? Like if they figure it out, you have 10 years during which you can work and you can buy Bitcoin while everybody else disagrees with you and doesn't understand it because they're intellectually lazy or they're a different generation, right? So that it's like me saying it's 1905 and in 15 years, everybody's going to have an automobile. And now okay, well, you have 15 years to get rich in the automobile business. Figure out, are you going to set up the dealership in New York City? Are you going to start a company? Are you going to be a salesperson? What are you going to do? You have 15 years. Figure it out. This is better than that. But this is a 10-15 year head start. I had this analogy. It's like you could be working at a McDonald's. You could be working for $10 an hour, right? But if you're sweeping the $10 an hour in an asset that goes up by a factor of 100, you're getting paid $1,000 an hour. Okay, so how long do you want to work at $1,000 an hour? Well, you want to work at $1,000 an hour as long as you possibly can, because once people figure it out, then you go back to your $10 an hour job, right? So we're in the gold rush period. People are, when they think about it, they're going to realize this is the period during which everybody in the world started to realize Bitcoin is digital capital, and there's a digital transformation of money, and that you want to hop on top of that. You want to exploit that, and there's 1,000 ways to do it. Maybe it's just work really hard at your job and buy Bitcoin. Maybe it's start a company. Maybe it's do something different. You decide, right? But I don't ever regret any stacking I did. I mean, we bought Bitcoin, below 10,000. We bought Bitcoin probably above 60,000. I mean, at the end of the day, we never know when the world wakes up, gets rational, and then it runs through the all-time high, and then we regret not having bought more. I would encourage anybody that thinks maybe I'm too late. I mean,
Michael Saylor, a prominent figure in the cryptocurrency world, outlines a significant shift in Bitcoin investment from short-term trading to long-term holding. He emphasizes the increasing involvement of exchange-traded funds, ETFs, and institutional investors, which facilitates this transition by allowing major financial entities to engage with Bitcoin in a manner consistent with their long-term investment philosophies. This shift is critical as it promises greater stability for Bitcoin's price and positions it as a viable component of diversified investment portfolios, moving away from its speculative past. The implications of this transition towards long-term investment are profound. It suggests a maturation of the Bitcoin market, potentially leading to reduced volatility and making it more attractive to conservative investors. As institutional investors pour in, their long-term outlook could foster a healthier, more stable Bitcoin ecosystem, likened to investing in a promising company's shares with an eye on long-term growth. Saylor believes that this evolving investment strategy will not only mitigate Bitcoin's price fluctuations, but also cement its status in the mainstream financial landscape. As Bitcoin becomes more accessible through ETFs and other investment vehicles, it could become a regular fixture in investment portfolios akin to traditional assets. This marks a significant leap toward broader acceptance and stability in the cryptocurrency market, heralding a new era where Bitcoin's speculative reputation gives way to its potential as a sustainable investment option for the future. Now we'll show you more clips of Saylor, but first, subscribe, and turn on notifications. Enjoy the video.
Is Bitcoin came public. It's clear that you're going to be able to own this as property for the long term. It's clear that this is going to catalyze a bunch of very positive behavior by other regulators in the world. It's going to accelerate institutional adoption. It's going to embolden the political supporters of Bitcoin. It's going to create a marketing war between various Wall Street firms. We see that going on right now. And it's going to strengthen and empower all of the OG Bitcoin holders, because even right now, people talk about, what is BlackRock bought $6 billion of Bitcoin and all these new ETFs. What have they bought? Like 1% of the supply. Well, that means 99% of the supply and 99% of the beneficiaries so far are the non-ETF holders. Right? I mean, there's 100x as much. If Bitcoin's up $10,000 a coin since this happened, well, that benefit accrued 99%, right? That's a $200 billion improvement in the market cap of Bitcoin. And of the 200 billion, 99% of the 200 billion accrued to people that don't even own the ETF, right? So it's accelerating, institutional adoption, and it's just accelerating Bitcoin adoption and empowering everybody else in the ecosystem to do all the things that they want to do.
Hey guys.
That is AI, and then digital money or digital energy, which is Bitcoin, right? And the idea that, you can embed digital intelligence into a car, a plane, a drone, a robot, a website, a product, a service, an AI, that's a big idea. And certainly there are going to be massive fortunes made. And if you understand how to embed digital intelligence, right, there's going to be a demand for that. And with regard to digital energy, right, the idea you can embed digital energy into a product, a service, a website, a company, a country, an institution, right, is a big idea. So you ought to think about how you might take advantage of that. Now, there may be other things, right, in the domain of medicine or physics or the like. I'm not an expert on all. I mean, these are two obvious transformational technologies. I would say pick the thing that you love, the thing that you're most interested in, and then I would say focus, because the most common mistake I think people make is, well, there's two mistakes. One is they pick the last generation technology, right? It's the thing that made your father or your grandfather or your great-grandfather famous, successful, rich, powerful, right? Is probably not going to work for you. You're not going to fight the next war with the same weapons you fought World War II with. And they didn't fight with the same weapons they fought the Civil War with. And you're not going to get rich the same way John D. Rockefeller got rich. So don't try to do what's been done. It doesn't matter how hard you work. No amount of work, right, is going to allow you to overcome a technology disadvantage, right? Nobody cares how hard you work if you're working with a hammer, trying to hammer your way through a mountain. So that's the first thing you don't want to do. But the second thing is, oftentimes people, they find that technology and they have a modicum of success and they get going on that platform, and then they declare victory and they think they take that for granted. So then they go to find the next success. So they want to conquer the second thing, and then the third thing, and then the fourth thing, and then the fifth thing. And what happens, it might be something as simple as you're successful on YouTube, and so then you decide you're going to do TikTok. But TikTok is different than YouTube. And so, you find yourself basically creating mediocre TikTok things, and then your YouTube content gets mediocre too. And then someone else, offers you a third thing, and you decide that's what you're going to do. And pretty soon you're doing three things and everything's mediocre. And gradually, your customer base, your fan base falls off, your support falls off because you diluted your focus. And I think,
what do you think of today's episode? Is Bitcoin sound money? Do you agree with Saylor? Post in the comments section your Bitcoin price prediction for the end of 2024 and peep this video because it's a perfect fit for you. I see you on the other side.